Hi, I'm Veronica Van Wollen, and joining us today is Jordan Trimble. Jordan is the president and CEO of Skyharbour Resources. Skyharbour is listed on the Toronto Stock Exchange on the Venture, as well as the OTC under the ticker symbol on the Venture, SYH. Jordan, thank you so much for joining us. How are you today?
I'm doing excellent. Thanks for having me. Looking forward to this.
Yeah, I'm looking forward to diving in, right? Uranium is one of those commodities that's kind of unloved. And I think we're going to really stand out here for any contrarian investors that maybe have felt they've missed the boat with some of the copper and gold runs. Before diving into kind of what the opportunity is here for Skyharbour, I'll give the viewers a quick summary, and then I want you to kind of dive into the summary in more detail. What we see here is a uranium explorer. Skyharbour has top tier assets in the Athabasca Basin. You have a very noteworthy shareholder base, as well as significant insider ownership. And I think that's all going to play in really nicely into 2021, especially with this green energy move. So off of that, why don't we kind of dive into it? Tell us a little bit more about yourself and Skyharbour Resources.
Yeah, absolutely. So for those of you who don't know me, I'm the president and CEO of the company Skyharbour Resources. I started running a company about 8 years ago, and I come from more of an entrepreneurial and financial background. I was previously doing corporate development for a gold company called Bayfield Ventures, which we had a successful exit with. The company was acquired by New Gold. Been involved with several companies on the management side of things over the last number of years. I've been working in the industry for over 10 years, and Skyharbour is really my baby. It's a company that I started with my head geologist, Rick Kazmersky. We took a vehicle about 8 years ago and saw an opportunity in the uranium sector. At the time, it was a very depressed market. We are now starting to finally see the market turn around. We've had a couple of months here where we're seeing the sentiment improve, the narrative change, and renewed investor interest come back into the space. So just to give a quick summary of the company, as you mentioned, we are a high-grade uranium exploration and early-stage development company. We have 6 projects scattered throughout the Athabasca Basin, which is in northern Saskatchewan. They're all drill ready. 2 of them have deposits on them. We're currently advancing our high-grade Moore project. This is our flagship project that we own 100% of. We've had recent drill results announced there, and we have plans to follow up with drilling in the next few months here. That's a key upcoming catalyst for shareholders and prospective investors. But we also maintain a very large portfolio of other properties throughout the basin. And with these projects, we carry out prospect generation. So what we do is we go out and we do a little bit of work on these projects, but we basically package them up to have other partner companies come in and fund the exploration. So we've now consummated 3 deals with 3 separate partner companies, which I'll talk a little bit more about. But the key takeaway there is we now have agreements for a combined almost 18 million in project consideration, in cash stock issuance, and in exploration expenditure. So it's a great complement to our focus at our flagship project, where we offer investors high-grade uranium discovery potential. We all know some of the recent success stories in the Athabasca Basin, like NextGen and Fission, and more recently IsoEnergy. It's a great value creator for exploration companies. There's a long history of work that's been carried out and money that's been made in the Athabasca Basin. And so that's what we're looking to do with our, not just our flagship project, but with our partner-funded projects as well.
Yeah, and we'll get into more of your plans kind of for Moore, as well as your other assets in the portfolio. Let's talk about uranium first, though. It's unloved. There's a little bit more love. Why should investors care about uranium?
Yeah, well, I think you hit the nail on the head. It was unloved. The sentiment is improving, as you and I talked about offline, and it's been a long time coming. Look, when we started this company and started building it as a uranium company, it was very unloved. It was a true contrarian opportunity, and just to highlight the depth of the bear market back in 2013, 2014, 2015, we were able to acquire our portfolio of projects for approximately $5 million Canadian. Wow. Now, two of these projects were in a company previously that was valued at a few $100 million back in 2006, 2007. So this just shows you the serious cyclicality of this industry. But what really drew me and my team to this was, this contrarian opportunity, specifically with uranium, being able to build a portfolio and build a very good team, a strong team to advance that portfolio. The second component that particularly interested me was we were seeing some new exploration methods and techniques and thinking that were being used successfully to make new discoveries that had previously not been found in the Athabasca Basin. And so, that's something that we pride ourselves on. We're using the latest techniques, and we're testing some new geological settings to find deposits, high-grade deposits in the basin that had previously not been found. And so you have a combination of a metal that's been under pressure, that's been under siege for a while. It's finally starting to move higher. And we can talk a bit more about that, coupled with strong discovery potential using new exploration methodologies.
Yeah, no, it seems like, a lot of those factors are playing into what's happening now in the market. And we know that 2020 was a year of headlines for green energy. That's been a big trend right now. And I'm curious how, in your eyes, you see uranium and nuclear energy kind of relating to that whole decarbonization trend. So talk to us a little bit about that, and also about the supply and demand fundamentals when it comes for the commodity.
Yeah, so I'll start with the supply demand. I mean, this is what I feel like my peers and I have been preaching now for many, many years. I mean, it really is a truly compelling supply demand picture where you now have a pretty major supply deficit that's formed to the tune of about 60 million pounds. So in 2016, we saw global primary mine supply ramp up to about 160 to 165 million pounds. Now, we've seen a major supply side response play out over the last several years, initially from the low prices, the low uranium price. So we saw production go offline. We saw project deferrals, and that led to a pretty steep decline down to about 135 to 140 million pounds. Now, this has all been exacerbated with the virus this year. We saw at one point back in April where almost 50% of global primary mine supply was shut down and disrupted from the virus. And so we are expecting in 2020, when the numbers come out, we'll probably see somewhere between 110 to 120 million pounds of primary mine supply. Now, that's all in the backdrop of growing demand at about 100 to 180 to 185 million pounds. And so it just shows you how fragile the supply side is. The risks to the supply side far exceed the risks to the demand side. And this is the case when you have a commodity like uranium, where the primary mine supply, the production, is concentrated both geographically and geologically as it is. 40% of global primary mine supply, for example, comes from Kazakhstan. The Athabasca Basin is another high concentration production jurisdiction. So you can see major supply disruptions happen quickly, as we did see this year, and it have an immediate impact on the market. Now, shifting over to the demand side, this has really been the spark, I think, recently in what we're seeing transpire and this building momentum, which is the green energy narrative and trend, and just the electrification that we're seeing happen globally. It's no secret we need more electricity. When you talk about the advent of electric cars, when you look at how much more electricity developed nations in particular consume, and now developing nations are consuming, we need a reliable, clean baseload source, meaning 24/7 source of electricity, and that is nuclear. It's plain and simple. It couples well with renewable energies, but renewable, like wind, like solar, are intermittent. Nuclear has a 85 to 95% capacity factor. It can produce whether the wind's blowing or the sun shining 24/7. And so it is that baseload clean source of electricity. And we see countries like China talking about going carbon neutral by 2060, the US going carbon neutral by 2050. Nuclear has to play an integral role in that. And that's what we saw post-election. And I believe that was one of the sparks here for this recent rally, is you saw now an incoming Biden administration that is going to put green energy and climate change at the forefront of their policies, and we've seen already a $1.7 trillion climate change budget. Included in that are the rollout and development of SMRs, small modular reactors. I think that that's going to be an incredible new source of demand, especially in the Western world. So, bottom line is it has a very important role to play as the green energy narrative and push continues to build momentum, and we see that continue to grow, especially with investors and the ESG crowd. I think you're going to see that translate into higher share prices for uranium companies and nuclear companies going forward.
And just for anyone who doesn't know what ESG is.
So environmental, social, and governance. So in particular, obviously on the environmental side of that, the nuclear industry and as a result, the fuel providers, the uranium mining companies, are now getting attention from the ESG investors out there. And I think that that's a trend that will continue. There's a lot of money floating around right now with ESG investors and products. And so I think as we see more interest for nuclear over the coming years, that will continue. And also just note, getting back to the US, because it is topical, we've seen some notable recent legislation that's been pro-nuclear. I think we'll continue to see that. The Russian suspension agreement recently amended and extended a new domestic uranium reserve. Bottom line is that there's also a trend towards secure domestic supply and supply chains. And that's, I think, going to be beneficial, in particular in Canada and the US. I think that that's going to benefit North American uranium mining companies. And so that's something else to keep an eye out for.
Right. Okay. So a lot of things there that are driving your bullish sentiment on the space, especially tying into the whole green energy movement. I want to bring that back into how that affects investors' decision today, but we'll talk about that a little bit later. Let's kind of pivot and focus now more on your flagship project, the Moore Uranium Project. I know it's on the eastern flank of the Athabasca Basin. Tell us about how you've acquired this project and what is the work that's being done on it.
Absolutely. So this is our flagship project. We own 100% of it. It's really, I'd say, the key value driver for the company currently. We acquired the project from one of our largest strategic shareholders and partners, and that's Denison Mines. We acquired this in 2016, going in there to expand on a historical showing. There was a high-grade lens that was discovered on a 4.5 kilometer long conductive corridor called the Maverick corridor. And so these high grade lenses or pods had been discovered historically, actually by my geological team led by Rick Kazmersky back in the early 2000s. And some very high grade mineralization up to 21% U3O8, basically at the unconformity. And so when we went in and acquired it, and since then we've carried out several drill programs, we've shifted our focus to not only discovering additional pods or lenses of high-grade uranium along strike in the sandstone and at the unconformity, but what we've been doing more recently is testing for what's called basement-hosted deposits. And so these are uranium deposits that are in the underlying basement rocks. And what's interesting about this project is there really hadn't been a lot of historical drilling or work carried out testing this geological setting. Yet this is where most of the recent discoveries in the basin have been made. So we know we have very high-grade mineralization at the unconformity and in the sandstone, but very little drill testing for the feeder zones that bring that uranium up. So more recently, and including this drill program that we just completed and announced results for, the focus has been on these basement-hosted targets. And just in this last program, we announced some of our longest widths of continuous uranium mineralization, 17 to 18 meters of continuous mineralization. We had one hole that returned 10 meters of 1% U3O8, and we feel like we've really just scratched the surface and that there's going to be more found there. So a key upcoming catalyst for shareholders to look out for will be another drill program that will commence here in February, continuing to drill test these basement-hosted targets and test that 4.5 kilometer corridor, which only about half of it has been systematically drilled.
Okay, so to simplify that a little bit, because I know there was a lot of information there, I want to make sure investors aren't missing the point. You own in full this project. Saskatchewan is a known fantastic region in the Athabasca. It's top tier, world class. And you're focusing with a large drill program this year on an area that hasn't had too much exploration. So you're hoping to really expand the resource here, is how?
Yeah, exactly. Absolutely. We're looking to go in and expand known zones, but also discover additional zones of high-grade uranium mineralization. And again, that's a key value driver for the company over the next 6 months.
So Jordan, I want to backtrack just a little bit and talk about Saskatchewan, because your flagship project, as well as all your other assets, are located in Saskatchewan. So talk to investors about why Saskatchewan is significant, as well as your other projects that you have in the portfolio.
Yeah, sure. So Saskatchewan in the Athabasca Basin in northern Saskatchewan is the highest grade depository of uranium in the world. You see grades of deposits there that are 10 to 20 times the average global grade. It's also consistently ranked as in the top 3 mining jurisdictions to work in. Our team has focused expertise on uranium exploration and development in the Athabasca Basin as well. So that's why our focus is there. And now on our other projects, as I mentioned briefly earlier, we do maintain a large portfolio of properties, over 240,000 hectares of ground, again, scattered throughout various projects in the basin. Outside of our flagship project, Moore, we do maintain 3 partnerships with companies that are actively exploring our other projects. First and foremost, a strategic partner and industry leader, Orano Canada. Orano's France's largest uranium mining and nuclear fuel cycle company. They have an earn-in option to earn up to 70% of our Preston project, which is over on the west side of the Athabasca Basin. They've been actively exploring and advancing that project over the last several years. Another partner we have is a company called Azincourt Energy, based here in Vancouver. They have an earn-in option at our East Preston project, and they're nearing completion there of that 70% earn-in. It was about a $4.5 million earn-in, both in cash and stock, as well as exploration expenditures. So they're actively exploring. They have plans for future work there in 2021. And our third partner is a new company that's come into the fold called Valor Resources. It's an ASX listed company that we just announced a definitive agreement with late in the year, last year in 2020. They can earn up to 80% of our North Falcon Point project, which is over on the east side of the Athabasca Basin. And in order to complete that earn-in, they have to spend $3.5 million in exploration expenditures, make just under $500,000 in cash payments over a 3-year period. And then we get 233 million shares of the company, approximately valued at just over $1 million. And this is exciting for us, not just because it's a new partnership, but it's led by a very strong and capable management team based in Perth, a lot of mining experience with their team. And I think it's going to open up a new audience in Australia for not just Skyharbour, but for exploration, uranium exploration in the Athabasca Basin. So bottom line is we have 3 partners that are actively exploring our other projects. We're currently looking to option or joint venture out the other projects that we have in our portfolio that we own 100% of. So that's, again, a potential upcoming catalyst this year. But I think the key takeaway with those partners over the next 12 months is that it will provide ample news flow and exploration and project advancement over the next 12 months that will help complement what we're doing at our flagship project. I always like to think of it as having multiple irons in the fire, increase your chance, your probability of making a discovery. If we have partner-funded programs, we're going simultaneously with our program at our flagship project. There's an increased likelihood that we'll find something or a partner will find something.
Yeah, no, that's those are all really, really good points. And I like that. It's optionality for investors, right? Exactly. We're getting close to time, but I want to focus on 2 last questions that we have for you. Tell us a little bit about the team and the share structure, because I know you have some pretty significant individuals involved.
Yeah, absolutely. Well, the share structure is straightforward. There's 99 million shares issued and outstanding. We're trading around a $25 to $30 million Canadian market cap. As far as the team goes, I take great pride in having a very strong team around me, both on the management side, capital market side, as well as on the technical side. So I run the company. I work closely with my chairman, Jim Pettit, here in Vancouver. My technical team's led by Rick Kazmersky out in Saskatchewan. Rick's a 40-year veteran. He was the senior geologist and exploration manager at Cameco for a number of years. Him and Dave Billard head up our technical team out in Saskatchewan. And more recently, we brought in some more capital markets experience with Joseph Gallucci, who's the head managing director of mining investment banking at Laurentian Bank in Montreal. And then last but not least, Dave Cates, who is a director of the company, is the president and CEO of our strategic partner, Denison Mines. So a very strong, capable group that has management and capital markets experience, as well as a focused expertise in the Athabasca Basin.
Mm-hmm. And David is part of, Denison is part of Lundin Group of companies, for anyone that doesn't know that connection. Okay, so a lot of information. I want to bring this all back to the most important questions that any new investor looking at this story would want to have, or existing shareholders. Why should investors look to add Skyharbour to their portfolios today?
Yeah, look, we have a very important year ahead of us at Skyharbour. First and foremost, we do feel like we've made a lot of progress at our flagship project over the last several years. We have drill targets outlined for the upcoming drill program that we feel can yield a major discovery and continue to add pounds at our flagship project, testing predominantly basement hosted targets, but also testing other targets on the Maverick corridor and at the project that have had very little historical drill testing. So high-grade uranium discovery potential at our flagship is a key upcoming catalyst. But as I just went through with you, our other partners at our other projects offer additional news flow and additional discovery potential. Again, multiple irons in the fire. And if they have success at these projects and complete their earn-ins, we retain a minority interest. Again, we have that optionality value there. This dual-pronged strategy of focused exploration at our flagship and prospect generation at our other projects is quite unique to Skyharbour. And then last but not least, and probably more important this year than any year previously, we are now seeing the early innings of the next uranium bull market. I truly believe that. I've said in the past, we saw the bottom put in 2016. We've seen the spot price, the commodity price tick up. We haven't seen it really break out yet. I think that's the next shoe to drop. We talked a little bit about why and what I see happening in the uranium market. But bottom line is, I do believe there will be a very strong bull market over the next several years for this commodity. It's been beat up for far too long. It's finally getting the attention of the investment community, broad and generalist investors. If you look at the combined market capitalization of all publicly traded uranium companies, it's still less than $20 billion. So still a very small market that has a lot of room to move. And I think as we see the commodity price, the metal price start to tick up, which I think we will see this year, I think we'll see more interest come into the space. And I think we'll see that result in higher share prices across the board.
That's great. That's an awesome summary. Thank you so much, Jordan. Again, Skyharbour Resources, Jordan Trimble, President and CEO. Skyharbour is listed on the Toronto Stock Exchange on the Venture as well as the OTC. And on the Venture, their ticker symbol is SYH. Jordan, thanks again for your time.
Thanks for having me. It was a pleasure.